It's always a pleasure and I would say honor to interact with the management of IHCL, Mr. Puneet Chhatwal. He's been missing in action. He's been busy building his brands. He's been busy with his expansion. He's been busy with taking Taj global. And that new crown in the jewel is that Taj has got again and again endorsed as the most powerful brand in the world now. Good morning, Mr. Chhatwal. So nice to have you back. How's life? How's work? How's Taj?
As you said rightly, Nikunj, life is full of care because that's the business we are in. But with our growth of brands and the growth of portfolio, we have no time to stand and stare, except when we interact with you on the ET Now.
Well, at least we've got you for 15 minutes and full attention to ET Now. So thank you very much for that. I'm going to start with a very basic question, which is that one side we've always met and discussed demand and supply. Demand by your guest or customers and supply which is coming in the hotel industry, hospitality industry. And you've always been making a case that look, there is more demand and there is less supply. But this is a service industry. How is the demand and supply of talent moving? I have the latest numbers of the hotel industry in terms of where the new talent is coming from, how things are moving in terms of wage inflation and talent. How is that equation for Indian hotels and the hospitality industry moving? While I understand the dynamics of supply and demand and room addition and room rates, but a service industry also needs talent, manpower, workforce. How's that moving?
Very interesting, Nikunj. It would be fair to say that the kind of the trajectory reverses because the demand for talent is much higher than the supply that is coming in, especially in light of COVID, when a lot of people left the tourism, hospitality, and aviation sector, and globally the sector suffered tremendously with never-ending queues at various international airports and also at basic services of housekeeping, etc. In general in the world, but a bit less in India because we have the demographic dividend and we have a fair balance between employment and unemployment. So being a relatively faster skilled sector because you can skill people to do the work in hospitality within 6 months to 1 year, the suffering has been less. Now coming to second part on Indian hotels, as we were really taking care of all our associates during COVID, there were very few people who left us, and a little bit of turnover is normal in this sector because of the nature of the business. So we did have that, but not a disproportionate one because we did not furlough. The term furlough was coined, I think, during COVID. We never furloughed any staff or we did not let go of people. So retaining people has really worked out very well for us. Finally, in order to meet the talent needs, we have come up with a series of programs at all levels, starting at an apprenticeship level to a fast track to general manager, middle management, senior management. And those programs are really helping us narrow that gap between the talent that is needed, the talent we have, and also to meet the unknown challenges of tomorrow that will come across because of the nature of the business.
Thank you very much for outlining that. And for a change, I wanted to start on the other challenge for the service industry, not the demand and the supply dynamics, because a lot of feelers are coming to us that this industry is growing, but talent kahan par hai? But with Indian Hotel, I must tell our viewers that guys, remember that dark time of COVID, when the hotel revenue had come to zero. That's the time Indian Hotel kept their commitment, whether it's furlough or I would say layoff. They ensured that the staff was taken care of, and the staff ensured that whoever was associated with the hotel, their needs were taken care of. So that's how you maintain and retain talent. Hold them together during bad times and they will take care of you and not leave you when it is good times. But good times continue, sir. You are launching another property in Bekal. And this is the second property in Bekal, if my memory serves me right.
Absolutely right. It's the second property after a very successful establishment of the Taj brand in Bekal over several years now. We have reimagined our Gateway brand, which we have kept, kept in for good times. And now that the good times are here, that was an important need that we were not servicing. That is in tier two, tier three, in resort locations, including in metro, an upscale full service brand. So we don't dilute the positioning of Taj, and at the same time, we don't dilute the positioning of our upscale lifestyle, which is Vivanta. So I think Gateway fills in that gap very well. And we start with the Bekal, but another four properties which have been renovated and have embraced the reimagined Gateway design. So all in all, we start today with 5 Gateway branded hotels. 2 more will come over the next 3-4 months, which are undergoing renovations, and there are 10 more in pipeline. So all in all, we would have around 20 hotels within 18 to 24 months from now under the Gateway brand, which is really the right way to start a brand, and not just 1, 2, 3 hotels. And after 3-4 years, you have a portfolio of 5 or 7. So in 2 years, if we have 20 plus, yes, then Gateway has arrived.
So let me just break it for our viewers. There is Taj, which is luxury. There is Vivanta. There is Ginger. And Gateway is below Vivanta but above Ginger. Can I put it this way?
No, it's the same level as Vivanta, but Gateway will be full service, whereas Vivanta, the word which comes from the French word vivre, which means to live, is more like a bon vivant, very lifestyle kind of brand. That's what it was when it started. So we had reimagined also Vivanta, but way back in 2018, and took it where it actually rightfully belonged. And now we have reimagined Gateways, so they are in similar price positioning, but it's the services that will be offered. So a 500 people wedding will happen in a Gateway. Gateway will be in tier 2, tier 3, even tier 4 cities, whereas Vivanta would be more focused on tier 1 and in metros.
Mr. Chhatwal, hi, morning. Given that, every time we speak to you, you always talk about a very promising start to the upcoming quarters. I'm sure that is what is anticipated this time as well. So give us a sense as to what the expectation is, individual geographies or individual styles of hotels when it comes to your occupancy and ARR growth.
Awan, you actually answered the question yourself. You said, whenever you talk to me, I always promise a good start, and I think nothing has changed on that front. The start is good, and we were able to deliver in Q1 despite an extremely difficult quarter in light of the heat wave and also in light of the elections, etc. So I think given the demand patterns being favorable for the sector, given that our not like-for-like growth continues on a very strong pace, opening more than 2 hotels a month, I think the combination of that should help us achieve a double-digit top-line growth for this financial year also. So I think it's the combination of the growth in the demand as well as the combination or the coupling with the not like-for-like growth that should help us keep delivering good results on every quarter.
We look into the future, and the festival season has already started with Janmashtami, and then Ganpati, and then Dashera, and then Diwali, and then happy holiday season starts. How is the order booking looking like?
Business on the books is good, Nikunj. As I said, some of the business shifted from Q1 to the rest of the year. And that is also very much linked to the auspicious wedding dates. So this first quarter, the wedding dates moved to the month of July. And that's why we ended up having a very good July for the sector in general and for our hotels in particular. And I think this trend is continuing. And I think this year we have a few extra auspicious dates, so which should further boost the demand in the food and beverage side or in the wedding segment side. And as I said, the supply in the key metros is very limited in terms of the new additions coming in. So the demand continues to be strong. And we are witnessing that, especially Mumbai, Delhi, Rajasthan, all these are very important markets for us. And despite the fact that last year we had a temporary boost of G20, so if you take out the impact of G20 and the World Cup and all other events, which everybody thought were one-off, and what will happen this year, I think it would be fair to say that the sector is on a good track.
That's very important. I mean, you in a sense preempted my next question in that answer itself when you say that, look, G20 in cricket is something which happened last year, but despite that, you're confident of a double-digit growth. So when you say that the addition in metros are less than what the demand is, I'm assuming that you're also referring to business travel. Because for a hotel industry or for a company like Taj, business travel is that extra delta which kicks in because that's fixed cost, and when that fixed cost remains constant and when revenue kicks in, it adds to operating leverage and margin. So can I assume that India is growing and business travel is growing and there's no slowdown whatsoever, at least in metros?
Absolutely, Nikunj. Also, especially in the recent months and in the recent weeks and in the coming weeks, look at the amount of delegations that are coming to India, because we had the Brazilian delegation, we have the UAE delegation coming in, we had the Africa summit very recently in Delhi. So all these factors were missing, because when you go into that kind of election period, then the business travel which is related to the government business almost kind of dries out. And now that is coming back very strongly, which is helping the demand on the business front. And most of the summits are very much in line, including, from your sister organization happening this weekend in Delhi. So I think a lot is happening, and we kickstart tomorrow the Indian Association of Tour Operators in Bhopal. So a lot of trade, travel associations are going full steam ahead with their events, including business houses, as I said, like yourself, and the government delegations coming in. So I don't see any reason to worry or to be concerned at this point, save for any other unfortunate or unforeseen events like we all went through in COVID times that may come our way sometime in future.
I'll ask you this question, but I think maybe markets will soon start talking about it. A lot of Tata companies, let's say Tata Power and Tata Steel, they've decided to really reorganize their subsidiaries. Indian Hotels also has some listed subsidiaries. They are important, they are listed. Would they remain like this, or eventually, maybe not this year, maybe next year? Puneet Chhatwal has already started thinking that what will I do with those subsidiaries, maybe merge them.
As a part of a group strategy, simplification of our businesses has been a mantra, and we try to simplify wherever we can. So we did do some of that work, but there is a lot more that needs to be done. At the same time, in the ethos of the group, we will always be extremely fair, transparent with all our partners, and there will be not a one-sided approach. Anything that we do has to be consensus-driven and takes care of all stakeholders, which is not the easiest way, but is the most sustainable and a long-term strategy any group with strong ethos and pathos can have.
15-minute window with you, so I'll not make it 20. So this will be the last question. In your last number, you spoke about new businesses adding almost 1/4, growing at 20% plus. That's actually more than 20% plus. Will that rate continue? And after AMA and let's say entire reimagination of Chambers, are there any new formats, new things which we should expect from Indian Hotel in next 2 quarters?
Absolutely, but I would not announce them before we have done. So continue to expect innovation, continue to expect not 20%, but for our new businesses, a 35% plus growth. That's the guidance we have given. And we are even now way a bit ahead of that 35% as we speak, which will come through the AMA and Ginger and Cumin and Chambers. continue to expect a good double-digit growth in our management fee income driven by our asset-light growth and the operating leverage through our own portfolio with initiatives that we are undertaking on a daily basis through our asset management activities. So operating leverage through the owned and margin expansion through the asset-light and new businesses and the reimagined businesses will contribute from day one and will never, we don't expect any of that to be a drain on our P&L going forward.
Because Taj is growing, margins are growing, room rates are growing. Customers are saying that when will we be happy? So let me ask you as a customer, when will pricing power come back to us? When we can get discounts, when we can get command, when we can demand, what we want in terms of rates?
I think there is a direct correlation, Nikunj, between the economy, the disposable income, and the richness that is coming into a country. So if we are going from number 5 to number 3, things will only get, in a balanced form for both customers as well as for the people who provide the service. And also the demand, as you had the speaker before me mentioned, that this sector is just, at the starting point of getting the benefit. When we get to India at 2047, the whole tourism story, the whole hospitality story, both on the domestic and the international front, will be very different than you have seen it in the last 20 years. So I think we are just at the beginning of a very consistent long-term growth in the sector. Obviously, there will be from time to time some headwinds, but in all probability and with whatever we know, this sector is set to boom and contribute significantly to the economy of India.
So nice to have you back on ETNA. I just want to share with our viewers that the turnaround in Taj or Indian Hotel has actually become a Harvard case study. It's absolutely remarkable. A couple of years ago, from the throes of pandemic, the stock had come to a market cap of 10,000 crore, now racing towards 1 lakh crore. Mr. Chhatwal and his team have really turned things around. And I think in terms of market cap, it is in the top 5 in the hotel industry in the world. And I'm hoping that soon it would be in top 3 and maybe why not number 1 in next couple of years. Good luck, sir. Thank you for joining us.
Thank you. Thank you, Nikunj. Always a pleasure.
If you like this video, then like, share and subscribe to ET Now.